What I'm about to share with you will have a profound impact on the way you look at real estate. It's going to open up your eyes to opportunities you've probably never considered. And most importantly, it's going to give you the opportunity to buy and invest in real estate you probably never knew existed. So grab a pen and a piece of paper. You're going to want to take notes. So if you haven't already done so, subscribe to the channel. My name is Wayne Turner. For nearly 30 years, I've bought, flipped, built, and sold thousands of houses. And I share that with you so you can have the comfort knowing that the information that you receive from these videos and subscribing to this channel comes from actual decades of hands-on experience in real estate. Now, what I'm referring to is actually purchasing, investing in real estate from owner finance properties. That's right. Owners are out there financing properties, and it's a means and a way in which you can purchase property. The cool thing about it is you don't have to have credit. You can have bad credit. All you need is cash. By cash, I don't mean cash to buy the house. I just mean cash for a down payment. You see, there are thousands of homes on the market all around the United States, and they are available for sale. There's no credit check, there's no job history check. You just have to write a check for 10% of the purchase price of the property. And that's correct. You get to own it and move in, and the owner acts as the mortgage company. They finance the property for you. Now I'm going to go through and answer a whole lot of questions in this video, more than likely that you will have and that you have already running through your head. But before, the biggest question is, Wayne, how do I find these properties? How do I locate these properties? Well, we have agents, thousands of them all around the country. By going to contactwayne.com, you simply can put in your information, and from there, we connect you with an agent in your hometown. Now, you're probably wondering, Wayne, why in the world would people do this? Well, it's a means of which to make money. People own real estate. People need to buy real estate. And when you put down 10%, 20% on a piece of property, the likelihood of you defaulting on that mortgage, on that loan, on that note that the seller's carrying is very, very slim. So many other questions are probably, Wayne, what's my payment going to be? And if I put that down payment on that property, does it go towards my principal balance? And is it amortized on 15 or 30 years? And what's the interest rate? Everything is negotiable, but I can tell you for the most part, it's amortized over 30 years, just like a traditional mortgage. The money that you put down on the property is your down payment going towards that property. The interest rates, they're negotiable. So typically we see a half to 3/4% higher than the current prevailing rate. Now, some people may say, well, Wayne, why would I pay a higher rate? I can just go get a traditional mortgage. Oftentimes, if you've been through a divorce, a cutback in hours, a shift job, a job change, let's say you went from a managerial position at your corporation that you've done for 8 years, and now all of a sudden you're in sales, so you're strictly commissioned from a salary. Well, that has to be seasoned for a couple of years. There are many, many different reasons in which a person would need to do this. And of course, by do this, I mean purchase a property this way. This is owner finance property. Now, here's what's really important to know. These properties, even though they're amortized on 30 years and you're set with a fixed interest rate, right? A lot of people say, well, Wayne, is it fixed? Is it adjustable? It's a fixed rate. And what's even better about that fixed rate is the closing costs that you pay are way less expensive than it would cost you if you got a traditional mortgage on the property, because basically you're not paying those mortgage fees. The seller's financing the property for you. Now, if you don't mind while I share some more information with you, I'm going to walk through a house with you so you can see a home that we actually have on the market for sale right here in New Orleans. It's a 4-bedroom, 2-bath house. The seller will finance this property for 10% down. You start the mortgage payment, you can close in a week. I know that sounds crazy, but a house that's like this one, it's completely vacant, no one in it. These types of transactions and home purchases only take about 5 days. So that's correct. You heard right. It only takes about 5 days from the day you write the contract on the property to the day you can physically close. It only takes about 5 days. However, I always tell people it would be in your benefit as a home buyer to have the home inspected. You see, once you pay for an inspector to inspect the property, which runs around $400, after you pay for the inspector to inspect the property, if there's anything wrong with the property, then you can ask the seller to fix those items for you at their expense. You're purchasing their house, so it benefits them to make sure any items that are broken or not working to their intended function are fixed before you move in. Now, keep in mind, this is not a lease to own. This is not a lease option. This is an actual purchase of a property when you purchase property this way. It's got a full bath right here. And by doing so, the money that you put down on the property is your money that you put down on the property. So if you buy a $295,000 home and you put down $29,500, you simply take the $29,500, subtract it from the $295,000 sales price, and that is your balance. Even though you're putting the money down, that is your money. No one can take that money away from you. It's in the property. It's in the home that you just bought. Now, what's really important to know is that if you stop paying your mortgage payment, you default on that loan, so to speak, the seller can take the property back and you lose your down payment money. You don't get that money back. So once you purchase a property this way, it's very important to know that you're going to go through with the complete purchase of the property. That's your money. It's in the home. You have that money. But if you stop paying the payments, you take a big chance on losing that money. Now, this is just like a traditional mortgage. And basically, if you don't pay, you can't stay. Now, this is really important. If you do stay in the property, a portion of your payment is going towards your principal balance. Now, you're going to have an interest rate, and you pay that through the mortgage payment, right? But what you're paying within that mortgage payment is also paying down your principal balance. So if you purchase a house for $300,000, you put $30,000 down. Your balance is going to be $270,000, but each month that you pay your mortgage, it's being deducted from the $270,000 balance. So the property is going up in value, and your balance that you owe is going down, and you're gaining more equity. Now, another question you should always ask is, Wayne, if I'm paying that payment, what else do I have to pay in addition to that payment? What about taxes and insurance? Well, the taxes and insurance on the property, as well as the principal and interest that you pay the owner in one payment each month, just like a traditional mortgage. Now, another question you should ask is, Wayne, who covers the maintenance cost? Who covers anything that breaks? The water heater, the central heat and air, the oven stove quit working. It's your responsibility. Congratulations, you're a homeowner, and then you now own that home. And as a homeowner, it's your issue should it come up, should it arise. Now, I always tell people it's not a bad idea to ask for a home warranty. A home warranty can be paid by the seller selling you the property, even though they're doing the owner financing, because it may be beneficial to them to make sure the warranty's on the property in case something does break. They know it's going to be fixed. Also, you can pay for the warranty, which covers a lot of the components and parts and things like that on a property. So if something breaks, you basically just log onto a website, file a claim, and they come and fix it. Now, keep in mind, when you purchase a property this way, I always tell people, get a home inspection done on the property. Here's a bathroom. This is a beautiful little bath they did in this house, remodel. So I always tell people, do an inspection. You can purchase a warranty, but you also want to make sure you get a title policy that covers you in case any work has been done on the property. That way, you know that there's no back taxes, liens, encumbrances, mechanical liens, or anything like that, where somebody's basically going to come knocking on your door after you move into the property and say you owe them money. Now, another question you should always ask is, can I make improvements to the property? And the answer is yes. You can make absolutely improvements to the property. You can paint, carpet, do whatever you want to do. You want to basically take that house and make it your home. That's the difference between a house and a home. A house is the structure, it's sticks and bricks, but you actually make it a home. The other question is, Wayne, can I sell this house? Absolutely. The answer is yes. Can you rent the property out? Absolutely, the answer is yes. Now, if they don't specifically tell you when you purchase the property, and by they I mean the property owner who's financing the property for you, if they don't physically say what you can and can't do, then you should be okay, but always double check and triple check. Look at the deed restrictions and covenants and make sure that everything is comfortable for you. Now, here's something else I want you to be made aware of. It's oftentimes homeowners that finance properties just this way. They put what they call a call on the loan. That means they are calling the loan due 2 to 3 years in advance. They may do it for 5 years. Now, you're probably thinking, Wayne, you told me they amortized it over 30 years. They do, which keeps your payment very reasonable. However, they reserve the right and they let you know up front that within 2 to 3 to 5 years, and like I said, everything's negotiable. At that point, they want you to get a traditional mortgage on the property through a bank or mortgage lender. But it's real important not to let that scare you away. And here's why. You see, when you buy a property this way, you've got lots of equity in the property. You bought it for, say, $300,000. Now you owe $270,000. You put down 10%. That's $30,000. It's so much easier to go to a bank or mortgage company and say, hey, I own this property. My name's on the deed. It's on the title. Here's my driver's license. I've been paying mortgage payments. All of that factors into, instead of just a purchase, they look at it at the mortgage company as a refinance. So you see how much easier it is. Instead of doing a traditional purchase on a new house, you're going to them and saying, hey, I have equity in a house. a home that I own. I just need to get it refinanced. Now, I can tell you who is a big fan of these types of oh, I'm gonna sit down, I'm not as young as I once was, who really likes these types of purchases. That's real estate investors, because when they purchase properties like this, it's on their portfolio per se, but it's not on their portfolio per se. The other person that likes these types of sales are actually real estate investors. You see, real estate investors, oftentimes they own a group of 10 or 12, 50, 100 properties, and they're ready to liquidate. They don't want to be a landlord anymore. Maybe they're getting up in retirement age, and this is a means that they can sell the properties off and still have a residual payment coming in from the buyer of the property. So don't just rule out this being for purchases of homes to live in. This is a very good way to invest in real estate. So now that I've shared this information with you, would you consider purchasing a house this way? Is this something that you would consider purchasing? Leave us a comment. Let me know. I'm really curious. And of course, you can go to contactwayne.com. We can connect you with an agent in your city. And better yet, have you ever purchased a house this way or know someone who's purchased a house this way? Leave us a comment. Let us know what you think, and be sure to give us a thumbs up if you like this video.